Buying your first investment property does not have to be a challenge. In this video, I'm going to give you 5 simple steps to getting your first investment property. Hello everyone. Welcome to the video today. My name is Zach Garcia and welcome to my channel where we talk about all things real estate. So as you heard, we are going to talk about getting your very first investment property. It does not have to be tough. It's very simple. While it may take some time and it does take effort, there's no magic pill. There's no magic sauce. There's no secret formula. It's just hard work, dedication. You can get your first investment property. So let's hop right into the video and let's talk about 5 simple steps to getting your first investment property. Step number 1, you have to save money. It sounds cliche, sounds like there's something crazy, but it's not. That is the very first step into getting an investment property. Now, how much? That's a great question. There are a couple of different ways that you can take to getting your first investment property. Let's talk about them real quick. So for those of you who own a personal home already, the best way for you to go without having to sell your home is a typical conventional loan, which means you're going to put about 20% down. So in the market that I'm in, at least around 30,000 is going to be a good starting point. Now in other markets, you may need more, you may need a lot more in certain markets, but at least where I'm at here in Louisiana, about 30,000 is a good place to start. It'll get you into a townhome. Maybe it'll even get you into a smaller single family home, a condo, a smaller, something small. You're not going to get into something big, but at least it's a start. Now, for those who have not purchased their first home to live in, there is another way of doing it. It's kind of a secret way, but it's a good way. If you want to purchase a duplex, a triplex, or a fourplex, with only 3.5% down, let me tell you how to do that. It's very simple. So the loan that you can take advantage of is called an FHA loan. Typically, those FHA loans are about 3.5% down, sometimes 5.5%, depending on how you work it and structure it. But with those loans, they have one requirement. That requirement is that you have to live in the unit within 60 to 90 days of you purchasing it. The other catch is you have to live there for a minimum of 365 days after you purchase it. Now, what you do on day 366 is completely up to you. If you want to take that unit that you're in, move out and rent it out, you definitely can. What I would suggest doing is getting an LLC, an S Corp, talk to a CPA on which is best for you. Doing what's called a quit claim deed, and I'll put it right here for y'all. That way y'all can see exactly what it's called, a quit claim deed. You'll transfer it from your personal name to your business name. And now when you go to buy another home for your personal, it looks like you don't own any homes because you don't. Your business does. So whichever way you decide to go, you need to just save the money. That is step number 1. All right, step number 2. This is a very important step. You have to work with the lender to get pre-approved. There's no way around it. You need to get pre-approved. You need to see how much you can afford. You need to work with a lender to see what your amount is going to be. Couple pieces of advice. I would definitely have your tax returns from last year available. They will be asking for them. They might ask for W-2s. They might ask if you own your own business. They may ask for bank statements, but just have all that personal information ready and available for them to look at. Now, if you're going the conventional route and you're doing an LLC, credit really won't matter that much. They're not really going to be worried about your personal credit as much. But if you're doing FHA or if you're doing it in your personal name, they probably will check your credit, run your credit score. So have good credit. Step number 3. This step is very, very crucial. It is where a lot of work is done. It's where a lot of effort is done. Not quite as much as step 4 we're going to talk about, but it's still very important. I would work with a local agent who knows the area, who knows investments, who knows rental property to find a good property. Location is so important when finding a rental property. And just a quick side note, I get this all the time and I hear this a lot. But there's no real estate agent that is dedicated to commercial. There's no real estate agent that is dedicated purely to residential. And what I mean by that is there's not a separate license for commercial. There's not a separate license for residential, at least here in Louisiana. So if you find a real estate agent, like I said, at least here in Louisiana, they can do both commercial and residential. There's no difference. So from here, you're going to want to find a good property. Have that agent that you're working with look for a few properties, few good locations, things that look good online, and you want to go view them. You want to walk around the properties. You want to take some pictures if they allow without disturbing the tenants. You want to try to get as much information as you can before putting in an offer. You also want to look in an area where you could potentially increase the rents. Anywhere near a school, hospitals, major highways. Those areas are going to be booming. They're going to stay growing, and they're great for long-term success. All right, so we're at step number 4. Now, this is where things get really, really good because this is where the majority of the work is going to be done. In step 4, when you're putting an offer on a property, you're going to want to negotiate terms. You're going to want to negotiate that price. You're going to want to try to get as much information as possible. Some agents are going to require that you put an offer before they give you rent roll and expenses. Others won't. It just kind of depends. So whether you get the financials first or whether you get an offer and then do the financials, either way, you're going to want to really dive into those financials. You want to check expenses. You want to check leases. If they have leases from the past couple of years, definitely check those. You want to see if that unit has increased in rent or if it's been the same. You want to try to get as much information on that unit as possible. Insurance, taxes, HOA fees, anything at all, because you want to put that into maybe an Excel spreadsheet, an app, whatever you use to track finances. You want to put it in there and you want to examine that property. Does it cash flow? Does it make money? Is it losing money? Because the owner that owns it now, they may have a way better interest rate than you. They may have put hardly any money down. They may have inherited it. And so they can afford lower rent. But you're coming in now, especially right now in 2023, where interest rates are not terribly low for investment properties. Trust me, I've tried. You're going to want to check that investment property against what you've been pre-approved for. You're going to want to check with your interest rate, with how much you're putting down, and see, do I make money? So another key element is getting an inspection. Inspections will tell you so much about the property, way more than the owner probably really wants you to know. But this is going to help you tremendously. Trust me, I've been saved by countless inspections from buying properties that ended up being a money pit. If you get into a situation where the inspection comes out and there's a lot wrong, there are a few things you can do. One thing you can do is you can just simply get out of the contract and say, I don't want to deal with this much work. You can also say, look, I want money towards closing. Or you can simply say, I just want you to lower the price of this property. Otherwise, I'm going to walk away. So once you get all this information gathered together, you know how much money it's making. You know what the expenses are. You can estimate what your potential vacancy rate is going to be. A good estimate is usually going to be somewhere between 5 and 10%, but that's where having those prior leases and seeing, how many times it's been vacant, that's going to come in huge. So once you get to this point and you say, you know what, I found the property, it looks good financially, the inspection came out not too bad, or if it did come out bad, but I'm getting a good deal, whatever the case is, you get to the point, you can get to the final step. Step 5 is my favorite step. So step 5 is go to the closing. This is where we can all sit back, relax. We've done our due diligence. It might have taken 60 days, 90 days, whatever the case is, but we finally got to the point where we are feeling comfortable. We get that call from the title company and they say, yes, you are clear to close. Let's schedule the closing. At this point, you should feel very, very good about it. You've done all the research, you've done all the homework, and you feel very good about buying this property. So all you have to do now is go to the closing, sign the papers, get the keys, and be on your way to financial freedom. So I hope everyone likes this video, subscribe to the channel, and I will see y'all in the next video.